Hello and welcome to this Commodity Champions that we bring to you from NSE. Well, this year has been completely belonging to gold, silver, platinum and perhaps some other alternate segments as well. Joining us is a very special panel here which will discuss on what the year has been and what is the next somewhat bringing to you in sense of these precious metal prices. Let me introduce you to Feroze Azeez from Anand Rathi, Lakshmi Iyer from Bajaj and Kunal Shah from Nirmal Bang. I also extend a very warm welcome to all of our Access members who are joining us for this show as well. Well, going back, as I said, gold and silver clearly have been the flavor of this year. Gold is up nearly 60%, silver is up 80%, platinum up 90% in this year. When you look back at the year, it has been about geopolitical tensions, tariff concerns. It also had to do with the weakness in US dollar index, and more lately it has been about US-China trade escalations. It also has been about the US government shutdown being prolonged as well. So enough and more reasons, and then on top of that there is investment buying, retail buying and Indian festival buying as well. Plenty to watch out for. Kunal, let me come to you first. What is your sense on gold now, because all the targets that were being put out for 2026 have already been achieved, and then we are looking at some more gains from here?
Yeah, so this year was an extraordinary year. I mean, after tracking from last 20 years commodities, I have not seen this kind of returns coming from gold and silver in my 20 years of career. And I think the reasons, like you rightly pointed out, and I'd like to highlight the main reason. I think it's more of a fear concerns. It's the fear that things are not going to do well for the Western economies. Okay. The way the debt has been piling up, and in order to hedge themselves, each and every central banks and followed by that investors have been buying gold like left, right, center, and there's no tomorrow. One after another reason keeps coming, and that is driving. So recently, last $200, $300 rally is mainly because of what is going on with the US shutdown. Okay, so I believe that the rally has discounted most of the positive news, which is supposed to drive gold to a higher prices. Now gold is becoming like a consensus trade. If you ask anyone, what is the outlook on gold, and everyone will tell you the same story. So it can't just keep moving up on the same news. So I believe that gold going forward may likely to enter into consolidation, or may perhaps witness some profit taking. But the fundamental trend of gold is not likely to change, at least for next 2-3 years, till the debt crisis continues to remain over, till this tariff concerns, the inflationary expectation. So I believe that we are likely to enter in a scenario where either gold will consolidate, or it will gradually go down in a shorter term, or may witness some profit taking. But if you ask me from someone's point of view, we are not structurally bearish on gold. Okay. But whatever dips, what we see in next 2 months, 3 months time, due to any reasons, it can go down without any reason also, the way it has gone up. So those will be the time one should again start accumulating, not with the expectation of extraordinary return like we have seen this year. Maybe perhaps I would say 10-12% return. That would make more sense rather than expecting another 40-50% return. Now everyone is talking about $4,500, $5,000. I've seen reports indicating $12,000. So this is generally a time, where you have to be a little cautious about, rather than being very optimistic. So coming on media and explaining the audience about the targets, I don't think so one should get carried away and give extraordinary targets. So I would say 4,500, 4,600 by next year would be a realistic target rather than a very swanky target. It can come because the problems of the central banks are not going to get solved. We are likely to enter into an ultra loose monetary policy era going forward. Right. The way the macroeconomics is placed right now, yesterday Mr. Powell has indicated that the quantitative tightening is ending. That means the possibility of QE is starting. How they are going to pay their debt? It's impossible. So the possibility of another round of QE in some or the other form is on the cards. And gold is discounting all of these. Inflationary expectations are going to move up. So I am of the view that corrections, dip, profit taking, whatever technical terminology we want to put, but we should wait for that. And that is the time when you again start, accumulating it.
So are you saying that people who felt bad that they didn't buy gold need not feel that way? Gold prices will come down.
Yes.
Also, how much of a froth do you think gold has in itself right now?
So
last $400, $500?
Yeah, absolutely. Last $300 to $400 of rally.
Just froth.
It's just, I mean, I was not expecting this the way it has shot up, and I'm quite amazed that from last from last 7 Monday, every Monday it opens up by $80. I have not seen this kind of. So what happens on Saturday, Sunday? Nobody knows. Every Monday it opens up by $70 to $80 gap up opening, and I mean this kind of phenomenon is a strange phenomenon. Even though the fundamentals are bullish, but it doesn't mean that you are not going to get gold tomorrow. So I think the sanity should prevail over a point of time.
All right.
And gradually it should correct. We should not worry about it. And when it corrects, you again indulge into buying.
All right. Lakshmi, coming to you then, and what is your sense on gold? You've been pro-gold for most part of the time. Feroze is not the same case. I'll come to him later. But how are you looking at gold prices? We've run up quite a lot. Are you also worried that gold is not behaving like a wealth creation anymore?
So, Manisha, gold was never meant to be a wealth creation asset class. It was never supposed to be the Brahma of your portfolio. It was always supposed to be the Vishnu. Now, Vishnu and Brahma have morphed, which is in fact a divine intervention, I would say. But gold is behaving like, I would say, Rajnikant, saying, you're familiar with Rajnikant dialogues? I'll say it in Tamil and then I'll translate it in English for the benefit of the audience.
Okay.
And way, tani way, matlab my way, unique way. And it is supposed to be unique, obviously, because there is no cash flows, you're mining out gold. But to Kunal's point, and I completely concur with that logic, you cannot have any asset class running and jumping dollars after dollars just because central bankers are buying gold. Anything looks good at a reasonable price, anything doesn't look good, whether it's gold or any other asset class at any price. So I think a sanity check is definitely required. So today what we are telling investors that yes, gold is supposed to be tail end part of your portfolio, but hey, look, 10 rupees or 10% allocation has become 15% allocation. Don't get conned or don't get sucked into the greed syndrome. Take out that money and keep it back and maintain your asset allocation. I think that is something which we will still maintain. That doesn't mean that the positive sheen of gold or the luster from gold is going to go away forever. That's not what we are indicating. But so much of FOMO trade pylons have happened. I think those pylons will have to see some correction so that investors will experience JOMO, which is joy of missing out gold allocation this Diwali, rather than FOMO.
All right, that's a good one. And I do understand that gold is a portfolio diversifier. It's not your primary portfolio. That's not how you build it. But you have so many numbers, Feroze, and he keeps throwing them at me at all times. Central bank buying, oh, this much. FOMO, this much. ETF. Do break down all of those numbers right now. And the kind of run-up that we have seen in gold, yes, this year is extraordinary. But when you look at history, clearly gold has not really outperformed many other asset classes.
Yes, Manisha, I think you've been bullish on gold, and I acknowledge this every time I speak to you, for years. And my bearishness on gold comes from the fact that if you're replacing that with equity, you don't need to have FOMO, right? Most of my clients have made 15, 16% for the last 5 years on a zero debt, practically, portfolio, and that's what gold has done after this rally. So that's point one.
All right.
Point two, my opinion is the easiest to predict was the last 600 points, so $600.
Okay.
Like Kunal was saying, I personally think that the last 500-600 was the easiest to predict. We did a show on 23rd of September. I put a reel. You asked me whether it'll go to 3,000 or 4,000. I said it'll cross 4,000. And my team said, okay, as soon as it crossed 4,000, they put a reel. I don't know. So point I'm trying to make is, gold is now a technical trade. When it's a technical trade, like it's a consensus trade, these are signs very easy to identify. When will that take a U-turn? No. I personally think, as of now, I would never recommend an ETF. What is the action out of it? It's a technical trade. Never do an ETF, never do a gold. You will not going to hold it for 2 years. Why will you not hold it for 2 years? Is before it corrects, you may want to sell it. Because tax inefficiency is going to be there. So MCX, I checked how easy is it to long on MCX. The cost of longing MCX and rolling it over for the last 7-10 years has been 6.69%. Highest being 2015 when interest rates were high. So I would rather roll it over. So point one I'm making is it's a technical trade. Like every Monday it's doing well. Then you don't buy ETFs. Those are not the efficient mechanisms. You take an MCX gold. But be prepared to sell gold. India's biggest problem is India has 22.5% of the total household savings is in gold.
Right.
but they never sell.
Right.
मेरी बहन जब तक कि gold physical form में था, she wouldn't sell. I bought her an ETF. She sold it. She says, so financial assets have this big problem that emotionally you sell. So you need to change your mindset. You buy gold, you also sell gold.
Right.
Is the third point I'm making. Fourth point, I completely disagree with this whole theory, which is so popular that I might look like an idiot, but I'll take the risk of saying it, that central governments have added gold. If I read you the data, in the last 10 years, there's only 2 countries which have added, which is India, by a percentage, I'll just read it out to you. You would see that one country which has added is China. Over the last 3 years, China has only added 300 tons. US is the top holder. Germany, Italy have not added one bit. France has added nothing in the last 3 years. Russia has added 0. China has added 14.4% of their reserves. And India has added 0 over the last 3 years. And everybody says, Ukraine की war शुरू हुई, सब लोग gold खरीदने निकल गए. तो सिर्फ एक चाइना है जिसने 300 टन खरीदा है. आप जाएं 10 साल पहले के डेटा में, top 4 countries have added 0. Russia has added 64% in 10 years, and China has added 30%. So China already had 1,800 tons way back 10 years. So what has happened is, this is more popular a theory, but if you look at numbers, it doesn't support that.
Well, the world actually has been adding 1,000 tons every year in last 3 years. And India has added perhaps 77 tons in the last year as well. So there are some numbers, but when you look at the longer horizon, yes, when you divide it, the numbers seem very small. But the last 2 to 3 years, we've seen immense buying happen there. You want to add, Kunal?
Yeah, I'll give you a breakup. So from 2010 till 2020, on an average, central bank has been buying 400 tons of gold.
Right.
But from 2021 till 2024, central banks has been buying 1,000 tons of gold. This is official WGC data.
Yeah.
So I disagree slightly that central bank has been the key reason. So every year, from last 4 years, 600 tons of gold have been bought by the central banks, more than what they used to buy on an average. So predominantly this year's rally, I would say this will not be a central bank driven rally.
Correct.
This is the rally driven by the investors, ETFs. But before that, from last 3 years, whatever upside, the the central banks have been the prime driver of the gold. Now, there is a myth that central bank never sells the gold. Okay.
Which they do.
So I'm not worried about right now we are in a multipolar world where the entire Asia is doing well and the West is having its own problem. So I am of the view that the Eastern central banks are not going to sell their golds, at least in a near term. But what about the West, who are burdened with the ballooning debt? So we also have to keep this in our mind. It should be under consideration. US, if you take $4,200 as on today, roughly their gold is estimated at $1.3 trillion, roughly. So some of the other central banks from the Western side, because of their ongoing debt problem, may sell gold. But the Eastern central banks, they will need some of the other things to diversify their FX reserve. And
apart from the US dollar and treasuries.
And today's time, it's a hard asset trade in the world going on. China is playing the hard asset trade. They want to have all the hard assets under their control, no matter what. Because whoever is having the hard assets under their control, they are going to win eventually this game of inflation. Instead of putting my money in US Treasury, I would keep my money in commodities.
Just to give a sense on numbers, the production of gold in world, as in sense of total availability, is anywhere between 4,000 to 4,200 tons. Demand in front of that is 3,800, 3,700 some years. So there always is a surplus in sense of gold. And within this, 1,000 tons is what central banks have been buying every year. So 25% of that buying has been by central banks. But that's one part of it. We do understand there's plenty happening and gold is not behaving like gold. Some people told me gold is behaving like Bitcoin, perhaps, the way it has been moving. But Feroze, the important point really is that everybody would want to know is, from here on, at $4,200 an ounce in sense of gold, it can go to a correction, it can go to 3,500, it can go to 5,000, we don't know. But from here, if somebody wanted to add gold to their portfolio, what is the best way to do that? And how much?
I think I've just been saying this, right or wrong, I don't know, but half your debt should be in gold. Okay, if you have half your money in debt, whatever you have, let's assume it's 50 equity, 50 debt, you can divide your debt into 25 debt and 25 gold. You will not regret.
Okay.
Now, how to buy it? Buy it in a staggered fashion. Unless it's an allocation which you're doing like an MCX leverage trade. Buy it in a staggered fashion. So Kunal Saab ka jo opinion hai, I completely subscribe. Net, they might also, central banks might become net sellers on a particular day. So you please move your debt to gold as an STP would be a good strategy. That's point one.
All right.
Point two, don't get too carried away with this rally of 55%. We looked at, out of the last 25 years, which were the best years for gold, and what was the return the subsequent year. That gives you a sense and brings in some parity in terms of recency bias. We as human beings love what performed, right? And we hate what underperformed recently. We give more weightage to 2025 than 2022. That's called recency bias.
Sure.
If you eliminate the recency bias, you'll be satisfied with your investment. So point I'm trying to drive home is that there could be lesser returns. So please don't derive your expectation from recent past. Otherwise, you'll be disappointed. Again, you will sell gold at the wrong time before it rallies up again.
Lakshmi, what is your sense? How should one be buying gold? And you know, usually when we talk to investors, they barely have commodity as a place in their portfolio. Ki, haan, wife to ghar pe khareed hi rahi hai. That's all the gold that I perhaps need. That seems to be changing this year.
See, what is our objective of making these investments? One is for stability, second is for income, some is for protection, and of course the ultimate goal is you need to beat inflation. So if you're looking at from an inflation beating asset, we just know there's only one Shansha, which is equities, which we have already covered in your previous session. Now when it comes to gold, and you look at interest rates in the country are almost bottoming out. You know, what's happening is that we are reaching at the fag end of the rate easing cycle in India, and therefore you need something which will augment your fixed income returns but still not be able to give you that kind of tucker to equities. And again, don't get completely swayed in by what you're seeing in 2025 or what you saw last year. So therefore I'd say that have it as tail end allocation. You can put it lump sum, there is no problem. Of course this timing is a little bit tricky. So this moment, if today and now if one were to allocate, if I were putting my personal money into an asset allocation bucket, would I stagger equities? Answer is yes. Would I put lump sum in fixed income? Answer is yes. And gold, I would want to wait it on for now because some form of gold is already there in the household. It need not be only investments. And the best way to own gold is paper gold. So ETFs, make no mistake. I mean, so that's very, very clear. Buying physical gold is doing no one any good. It is anyways a dead asset class, and I've maintained that forever, however bullish I was on gold, but that does not change.
Okay. I just want to quickly come on in case of gold prices from here. I know it's a difficult one and nobody wants to really predict on where the gold prices could be going. But Lakshmi, I'll start with you first. Where do you think gold can see a range now for the next Samvat? I'm asking a range. It can be either ways, but I know it's going to be a big one because we started this year with 2650. Sure. We are at $4,200 an ounce. It's been like a huge run.
See, clearly gold will need more oxygen cylinders to summit higher. That is very, very clear, at least from what I understand from the investment landscape over 2.5 decades. So I'd say that initially we could see probably downside movement in prices for gold and then an uptick. So there is still some meat to precisely put numbers. You know, even if you reclaim 4,300 over the next 12 months after a price point correction, it's a job well done for the entire year. So that's the way we look at it from a gold perspective.
So are you saying 35 to 4,500? I'm just trying to get some numbers.
I think that would be a fair range to go with, yeah.
Kunal?
Same, I think the way I stated on the downside, 3,800 or maximum 3,700 kind of stuff, and then again up to 44, 4,500. That is the range I see. So it will be difficult to generate a big alpha next year. This year was an exception.
Manisha, my opinion is that gold might have some headwinds this year. If the global uncertainty solves itself in terms of the trade war, and also the geopolitical uncertainty solves itself, there's a desire to solve it on the US front, on the Trump side. If he's successful in solving both of these, I think I would look at it at 3,000, 3,500.
All right.
If those get solved. And Trump is as predictable as it could ever get.
Feroze, as Lakshmi said, gold ETFs is one way to buy it, not physical. We don't have sovereign gold bonds anymore. I know that some people are venturing into digital gold as well, where you buy it online in a very tokenized form. But when it comes to jewelry companies, and now there are plenty and more coming perhaps with more and more IPOs when it comes to jewelry companies, is it about, and we don't have too many mining stocks, by the way, there, but gold loan companies. So what, if you had to look at it in an equity way, if somebody wanted to invest in gold in form of stocks, what is a better way then?
Manisha, actually, I had, this is a little dated study. When DSP had launched a gold mining fund,
right.
I was trying the correlations for the subsequent 10 years of its existence. I saw negligible correlations. So playing a proxy deal of gold with gold stocks may not be the most sensible. One of such a large jeweler in Orissa is a very, very close friend and classmate. He says, I'm praying that my stock gets undervalued so that I'm able to sell it. They get mark-to-market gains, but business is what gets valuation.
Let me come about silver now. And Kunal, what's your sense on silver? Because silver is an absolutely different beast here, because short squeeze and way we've seen things happen, and then it's in a critical mineral list as well. So silver really seems to be behaving very, very differently. 80% of a run-up, are we looking at more?
So before I explain, there's a rule in commodity. Whenever there are shortages developing, the price you cannot predict. There are no mathematical, statistical model which can predict any price. No technical, no mathematical. So that is what is happening in silver. So, I mean, from 80,000 to almost in physical 1,80,000, 1,88,000 is the high last week silver made on the physical. So we have seen a rally of 1 lakh rupee.
Lakshmi, it's difficult pushing people to buy gold added to their portfolio. Silver is even more difficult.
See, silver just evolved. I mean, at the beginning of the year, if all of us were doing this show hand on heart, if you'd ask, will silver be quoting or will the jeweler quote you 2,20,000, we all would have had like laughter and splits. So the answer to your question, Manisha, is that if any asset class, for whatever reason, sam dam dand jaise bolte, for whatever reason, behaves in a particular manner, which is not attributable by any form and shape, then the better way is if you are holding it, at least take your profits out. That's point number one. Point number two is if you want to add fresh, it doesn't hurt that you decisively establish a trend before entering that asset class. I think that is what holds good for silver today.
You know, Feroze, I also do some, number crunching, by the way.
You do a lot more than I do.
Yeah. So most of the short squeezes that we have seen in history last for 9 weeks. This is the 9th week for silver. But the way we are, it perhaps may take another 2 or 3 or 4 weeks before we completely see this squeeze working its way out. But having said that, for silver, what is your sense? Is it a good part in your portfolio, or do you think this has been an abnormal year and maybe not? And silver ETFs perhaps, again, is another story, by the way. But how would you silver in a portfolio?
See, like Lakshmi said, silver is a very, very difficult asset for us to predict. Of course, Kunal has been doing this for a year long enough. How I look at silver is only as a ratio with gold, because gold is a little more predictable, and then you do it as a ratio. As a ratio, it's still fairly valued, right? That's one thing, right? 79 pay gold to silver ratio is not bad at all. Point one. Point two, the whole short squeeze argument can be mathematically checked. How do you check in a rising asset class if the open interest reduces? Okay, I don't see that happening. It was not just a short squeeze rally. If it was a short squeeze rally, what happens is there would be physical gold is at a premium, like Kunal Shah said, 1,88,000.
Right.
But the futures of silver quoted at almost 10-12% lower. That doesn't happen when there is a short squeeze. Short squeeze में आपको physical कम में मिलता और speculative asset महंगे में होती. वो short squeeze की argument is not mathematically supported. I might be wrong. There could be other variables in this.
Okay.
But I'm seeing it as any asset which is being speculated.
Well taken. Okay.
So to answer your question, if I'm buying silver for the long term, I would be more comfortable buying silver for the long term than gold.
All right. So between gold and silver, silver still is a better bet. Thank you, gentlemen, lady, for being part of this very great conversation, and so much data and so much more analysis and opinion has come out with this. And again, thank you, our Access members, for joining in. You have been a great audience today. Really appreciate it. Thank you.
Happy Diwali to all.
Thank you.